Hey guys, it's Will here. I thought I would go through the markets and some of the sector ETFs that might point you at the right sectors or stocks that you want to be looking at. I'm using TC2000 here, and I've got a watch list of the some of the markets here. So I've got Nasdaq. I use the ETFs, but QQQ. Obviously, it's looking really good, but we are pretty high up here off the 21 EMA and the 50 as well. And one of the things that I like to do is look back at where you should or could have bought, and there's different different spots for that. But it kind of trains you to pick those spots sooner than to wait and chase something that's already up pretty high. And so I'll talk about that. It's a little different from I've talked about it I think a few times, but it's instead of just talking about a certain stock that people like or whatever, this is more of a fundamental type of thing in terms of a strategy that you can use and apply to your own, whatever your own situation is. So, for example, in the indicators down here, this is like MACD or price percent oscillator, and you can see a few things are happening. You have a crossover here when the oscillator crosses this exponential moving average right here. So you can look somewhere around that. And I've talked about when you're above the 50 and the 21 EMA, so that would be a good entry point for that scenario. And also when you decide that you're going to purchase, you have to kind of think about what your entry point criteria is and what your exit criteria point is. So for example, if you buy here, you might decide you're going to hold it as long as it's above the 50. This thing here might have triggered you. It's really close. You wait for the close, it's really close. You might wait to see what happens the next day, and you'd still be riding that out. You could decide you're going to wait until the 21 EMA crosses down below the 50. So because it's right hugging that line, it never actually crossed. So you get these dips, like even this dip here, the 21 never really got below the 50. So it's, you're going to have to withstand, like here, by the time the 21 crosses the 50, you're already down at the bottom. So doesn't work in every scenario, but you have to understand like what your criteria is. So if you decide you're going to, so that's the one indicator, and the thing that happens sooner than that is this curve, this MACD or price percent oscillator starts to go up. It hits the bottom and it starts to go up, and then, so it's a bit sooner. The other thing you see, which is sooner, is this, this is a histogram. It shows kind of the distance between the two lines, so or the amount of gap between them, and so you start to see that decline, and so it's a riskier earlier entry point to get in when you start to see these decline. But if you want to be more conservative, when you hit the zero line and it starts to go green, you're at that point, at the crossover point. And so that is a criteria. The other thing, I haven't talked too much, I don't think, about stochastics, but if you're kind of a buy the dip person, you're not going to wait till it's up on, above the moving averages. You can notice that when you're down in this low area of the stochastics, so 20 or below, and then you have like a crossover, these are usually really good entry points just from like buying dips and things like that. Like you can see here, when it dipped down, when it went way down here, stochastics were down, and that might not be necessarily just buy when it's a low stochastic, but looking for a signal, like we got up above this big low candle, or if you're using candlestick signals, like there's gap ups here, there's like a kicker signal here, stuff like that. But if you do buy, if you look at the spots where you're way up here. You don't want to necessarily be buying, and you wait. You have this drop, and you get down in this low stochastic area. And here's another one. So those are some areas if you're going to be buying dips. So like I said, it depends on kind of what your criteria is. Because if you were using like the 50 and you're riding it up and then all of a sudden it breaks the 50, you would sell. And then it gets above the 50, you would buy. And then so there's a couple of points where you get in and out. But if you looked at the 21 EMA staying above, it keeps you in longer. You wouldn't necessarily get out. There's a bit of a cross here. It depends how, rigid you want to be with some of these rules. So anyway, I think the NASDAQ is, obviously it's strong, but, it's up pretty high up here. But let's look at the S&P 500. Same sort of scenario. We broke a new high, and it's in a strong position. So once you see that the market is in a nice uptrend, you can look at individual stocks. You can click on this watch. This is called related items of the component watch list. It's called the component watch list. And so inside here, you can use your scans and find specific criteria. But these are all the stocks in the S&P 500. And that's a really nice feature. If you want to get a free trial or $25 off, you can check out the link in the description of the video. I've got the gold plan. I use US real-time data as well. And that's going to show me also, you can see here it says 658. This is showing me pre-market data. So up here there's this thing pre-market. If you don't want to see that, you can turn it off and just say show data for regular hours. But if you want to see what's happening in the pre-market, of course the volume is usually lower in the pre-market. But it gives you that head start and also post-market. It'll still show you the trades that go on after that. So so NASDAQ SPY is looking really good. The Dow had a rebound. It's now above the 50 and the 21. So they're all looking good that way. IWM, which is Russell 2000, has been in a range here. I probably wouldn't be buying this because of the fact that, we've hit off this. Once you see something like bouncing off of a resistance point, you might want to wait until it breaks through there. So if we go to the sectors, like I'm going to see some of these in pre-markets here. Silver is up a lot. This is a junior miner, so that's a riskier sector to be in. But when I was talking about buying dips, recently we had this drop, and if you look down here at the stochastic, it's very low. It's 11, and you start to see, like I said, the histogram starting to come up. The bars are getting lower. It's heading up towards. You start to see this curling. So if you wanted to get in, as a riskier, like a buy the dip sort of thing, this would be where you could get in. And of course the issue is, or one of the risks is that you're going to bounce off the 200 or the 21 or even the 50. But there is a bit of distance there if you were going to trade. But like I said, there's moving average resistance lines. But if you're buying and holding these spots, see here, like the stochastics down here, this stochastic, these were dip buying opportunities if you're looking at that approach. All these very big dips. There's people that wait or buy dips, and it can keep going down, but you're buying at a lower price point. If you want to scan, so that's the other thing I wanted to talk about. Instead of looking at the charts all the time manually, visually, you can run scans. So I've got a couple in particular I'm going to talk about. So that's stochastic I talked about. You can create a scan. If you go to the stochastic area, and you click on that arrow and say create a condition, and then when the stochastic is greater than, instead of a number, you can say crossing the other one, or actually you could put a number. You could say less than 20, or whatever number you want to use, because the stochastics down here are in the range, in a fairly low range, 15, 20. So you could scan. So I've got a scan here. I put 35, so it's a little bit higher. Or you could say when it crosses the moving average of the stochastic, or if it's moving up, things like that. So this is the Canadian ETFs, and it's a junior gold. So you can see if you're looking at stochastic as an entry point. Of course, you're not above these. You're in a down, maybe in a downtrend sometimes. Ideally, the dips would be in an uptrend above the 50 and 21, and just dip buying opportunities in an uptrend. That would be a better scenario. Let's see if I can find something like that. Yeah, like potentially up here above the 50 in an uptrend, and you're looking at these low spots. So try to avoid buying way up here, and when you're in the high stochastic area. So that's one strategy. If you want to do it for stocks that are, or ETFs that are in an uptrend, not just buy just any dip, So another thing that that's similar to the gold. This is regular gold miners. This area was a dip buying opportunity. Sorry, I don't know if I mentioned this, but this is the international markets outside of the US, Europe, and Asia, stuff like that. If you're looking at stochastics, obviously these dips are where the low stochastic areas are happening. Here's another one, which is a Europe, Asia, Australia hedged. It's the same one as this XEF, but it's hedged against the US dollar. So it's got support at the 50, kind of broke this little downtrend, and the stochastics are kind of rising. So that is a good potential entry. So it kind of would get you in sooner than if you see this starting to rise or curl around, because sometimes it gets close and it never actually, like here it comes up and it bounced down. So if you try to anticipate, you can get burned sometimes when you haven't really crossed on the MACD. If I click on this button, I've got this strong relative strength. So this is in relation to the S&P 500. So that's one thing I really like about TC2000 is the scans that I have with various conditions, and I've got different tabs here for different. So there's a lot of data here within a small space. So each tab can be a different watch list, a different scan, different markets, different whatever you're looking for. So the strong relative strength, you can see the communication. So that was Facebook and Amazon and or FANG stocks type stuff. Unbelievable uptrend. Lithium. It's been really good, but like I said, when you see it way up here, you probably don't want to be chasing these things. So you could look for opportunities. If you bought here and said, if it's right at the 21, or the next day, you would have to use the 21 EMA you could use the 21 as your sell point, because that's your entry point. So you have to figure out or use this low here. If you bought here, seeing some strength, and said it, I'd sell if it drops below here. So you have to understand kind of what your entry point is. Energy is doing really well. The oil prices went up again, and so anyway, that's good for today. Hopefully there's some pointers on stochastics and some of the indicators, and sort of determining what your entry point is and exit point if you use whatever criteria that is, and scanning and stuff. So if you want to get TC2000, don't forget, you can get a free trial or $25 off in the link below in the description of the video. Talk to you in the next video, guys. See ya.